Yeah, good afternoon, everyone. Gabe Velazquez here with you on a Friday. This is the 12th of May. Welcome, everybody. Hopefully, we can get through another 30 minutes. Hope everybody's doing great. Um, yeah, the markets have been challenged, no question about it. We've had, just this back and forth trading. Um, One of the things I'm going to do I'm going to do a class coming up here a week from Tuesday. Hey, how you doing, JT? Hopefully we can get through another session of this thing, man. This is crazy. Anyways, so yeah, everybody, we're going to have a session. One of the things I've been talking to a lot of folks is, this kind of, if you, so let's say I can start there. If you want to, sign up for the newsletter, spend some time with me, go ahead and hit the links below. But, I think actually it's going to be a short session because, they're really, going on now over 5-6 weeks. We've got range within a range. So let's start there. One of the things that's going on right now is all of the markets are being almost kind of run by algorithms. They're all linked together. If you pull up a chart right now, you pull up a chart of like the S&P and the NASDAQ, you pull up a chart of the bond market, the 30-year, the 10-year, and you pull up a chart of the dollar, you can see all three of these markets are basically swinging back and forth to some degree, various levels, obviously. And so that just gives you a sense that everything is tied together. Now you take that and extend that out to the dollar being in a range, and then so you take that and you look at the commodity, the com dolls, which I've been focused on, the Aussie, the New Zealand, and the Canadian. Those have had some big swings, and so, but here's the issue: if you're traditionally trading on supply and demand and all that, you're basically now having to switch literally to trading against support and resistance because that's the only thing that's working right now. You typically are not getting a ton of levels, from a kind of traditional perspective and all that stuff. So that's kind of the market we're in right now. Whether we, when we get out of this, we've got, debt ceiling concerns and all that coming up, which, by the way, last time we had a situation like this was back in 2011. The market dropped sharply about 19% and then recovered. So could we be again in that situation? Obviously, we don't know for sure. The generally what historically has happened is they take it to literally the brink, the last day, then they extend, they push out, kick the can down the road, whatever. But in the meantime, this could be different this time around. I mean, we've got a tightening Fed, we've got inflation, we've got some banks situation still lingering. So all that could be something that may cause some consternation, may cause some strain on the markets. But even after that, we still have the market kind of being resilient, still driven, as I've written about this, I've talked about this, still driven by the same stocks. The big mega cap tech is still pretty much running the show. Banks are down, energy's down. So again, under the surface, there's still a bunch of that stuff going on. So anyways, we did put on an SQQQ call today as a kind of looking to see going out until June when this is going to get resolved or not or whatever. So that, and generally speaking, range trading has really been pretty much all there's been, which can be a good thing or a bad thing. If you are looking at these ranges, one of the things that you want to do is avoid the middle part of the ranges, because if you are buying pullbacks that are too close to the top end of the range, you're probably going to get whacked, or vice versa. So the question also becomes, where is the ranges? And we've got and also what happens is if you look at your charts, when you have a broad range, typically you get smaller ranges in between that. So On the S&P, let's just go through the markets real quick here. We've got, 4,200, 4,100, more or less is the broad range. You could actually extend that down to 4060. Now, recently, over the last, I would say, week or so, we have been bumping against 4167 resistance. You can see that on your charts. We came up there a week ago, Wednesday. We keep pushing up against that. And last week, in fact, we had a level 4190. You can see that and we can't even get up there. So now the new range is 41, let's call it 4170 down to 4115 or so, 4110. In fact, we just bounced off the pivot low this today and ended up right smack in the middle, 4132. So that really is all you got to work with at the moment. I mean, obviously, there's still some leeway in there if you're super nimble, but that pretty much sums up the S&P. What's interesting on the NASDAQ, and this is part of the reason why we put the SQQQ on, is the NASDAQ, obviously still the leadership, but it is running up against the October of August highs of 2022. And there is a daily distribution level. If you look at your charts on the NQ, 13,484, 13,485 to about 13,586. You notice we did hit that today. We pulled back. No follow through yet. We'll see if that actually pans out. But you can see that clearly on the chart. So we are against daily, daily supply or distribution, whatever you want to call it, on the NQ. And generally speaking, if this is actually going to topple the market, if this is going to be the top of the market, it usually happens at these bigger time frames. And then if that didn't work, obviously we're right up against the August highs as well. Contrast that with the small caps, we're sitting at the lows. So the whole kind of this disparity between these averages, the small caps, banks, and the mega caps, people are pointing to that as being negative. I mean, and I think this is actually why the market continues to kind of just chop around in here, because there's so many cross currents. And add now you got the banks, you got the Fed, now add to that the debt crisis or whatever, the debt ceiling situation. So that is, remember, markets are just a collective psychology of everyone participating, and even institutions. You can see by the contrast and all the averages and all the cross currents. And under the surface, I mean, there are only a handful of stocks that are actually moving quite a bit. I mean, you get these, like for instance, today, FSLR, just exploded to the upside after breaking down. And so you've got all these kind of inside, below the surface, all these stocks. JPM is just kind of range trading. Energy stocks, as have been dead since last year. They were the hot ticket last year. So in any event, that's where we're at. Bonds, again, I could have done this show a week ago and we would talk about exactly the same thing, right? 30-year, what is it? 132 to 129. The 10-year, 117 to like 113, back and forth, right? 10-year clear resistance at 117, not as clean on the bottom end of the range, smack in the middle of the range. There you have it. I mean, so literally that's all there is, right? So, pick your spots, take the top end of the range and the bottom of the range, you're going to trade bonds. Dollar, similarly. I mean, dollar looks like it wants to break out to the upside, which I find really interesting because, all this talk about the dollar losing its, world reserve status and all that kind of stuff. And here we go, having a huge rally in the dollar back up to maybe 103, which pushed the currencies. So 101 to 103 in the dollar. Again, very similar to, we were in these smaller range. We looks like we broke out about 102 and then right back up to 103. And that's yeah, that's pretty much it. So inside that, obviously the currencies, we have the euro trying to break down. It's been very choppy. The British pound, we actually wanted to get short on the British pound, up around, I think I mentioned that level, 127, never got up there, right back down, but very, very choppy trading. All the action really is in the Comdols, in the Aussie. Again, back to the top end of the range. You can see that very clearly, 68.25, all the way back down. Is it going to break 769, 65.91? We'll see. New Zealand, you can see the strong corollary between all the commodity-based currencies. Again, we never got up to the high end of the, we just basically clipped the pivot on New Zealand, trying to get short 63.96, never got up there, and obviously fell off like crazy, and now we're going to come back down to 61.31. So you can see the, and then Canada, 75.40 to, now we're probably heading right back down again to, possibly the 72. So you get the idea here. It's pretty interesting kind of dynamics going on in the market right now. Peso looks like that's going to break 56. There's some great levels above. If you are interested in the peso, if we break above 56, now we're getting into some weekly levels up top here in the 57.82 area. So check that out. What are you going to say about gold, right? Gold hit a nice level at, again, getting no traction. Everybody fell in love with gold. Just very choppy, very rangy. Let's see if we can hold 1986 on gold. Silver broke down. We had a big commodity, big metal sell-off with China yesterday. Took silver, silver looks like it's heading down to 23.5. Copper also, we're actually trying to get long copper around the 350 area, 360 area. So we'll see if that actually pans out. We're kind of paused today. Platinum had a really nice level at, I don't know if you guys trade platinum. Been trying to look at that now because trying to expand. Platinum is a thinner market, $50 a point. That's a great market if you are willing to take on a little bit more risk. 1137.50, and it looks like we are heading down to 1035 on platinum if you are looking at that. Oil, similarly, we're trying to get short oil at 70. We're trying to get short oil at 75. Didn't get up there. Now looks like we're heading back down to the low 60s and possibly breaking that down. I don't know. So, again, oil back and forth as well. Looks like we may be setting up a range in oil as well. Nat gas had a burst today. And looks like we are starting to put in, higher lows on every pullback in nat gas, but just cannot get any traction. We keep getting these little kind of pops. Like even today, we had, if you look at your chart in nat gas, we had a little burst, took us up to 232, pulled back. But we are starting to form a little bit of a move here. Maybe weather changes or whatever. Again, on the commodity, especially nat gas, lower prices are taking a lot of LNG producers out of the picture. So they're kind of, like we say in commodities, lower. What's the best cure for lower prices? Lower prices, because that's what's happening with nat gas is at these depressed levels at 2.5. It's basically putting a lot of people out of the LNG production. They're shutting down operations because it doesn't make any financial sense for them. And so as we keep going through that and taking essentially supply out of the market, that actually will be positive for LNG, for nat gas. Eventually, we still need a change in the weather, I think, but maybe that's coming up. I don't know. We'll see. This is one of those markets that just kind of frustrates the heck out of you, and then when you're ready to give up on it, it just has a pop. So maybe we're there. We are still, by the way, long boil calls on that. We're just kind of back and forth. We got about 3 weeks left, 2 weeks actually. So hopefully something happens on that. But it's not a bad little trading. I mean, even just chopping around in here. I mean, with nat gas, even we got that smaller contract, that 2,500 MBTU contract, which is actually not a bad deal to trade. But it's again essentially kind of range trading. We had a grain report today. Not a lot happening. Just to sum that up, we've got soybeans. Looks like they're headed down to 13.50. We had a nice run up in soybeans from 14 a bushel up to 45, and again, just largely back and forth. I think we're probably headed down to 13.50, 13.60 on the soybean contract. Wheat also holding above $5, but I think I mentioned we were trying to get long at 6 a bushel, and we missed that trade, and now we're kind of back into the range. And corn just flat, chop, basically in about a 30-point range in corn, and that pretty much sums it up, everybody. It is it is a bit of it is what it is. We trade what is, not what we want, and we kind of work around that. I would probably be looking at support and resistance levels if you want to, I think that's working a little bit better right now. And that doesn't mean you don't have opportunities, but when you're in these kind of ranges, you just got to pick your spots and not get too, you're not probably going to get big targets right now because, you just kind of, still, you can get 60, 70 points on the S&P. I'd like to go for 100, but, it is what it is. So, yep. So that is the market we're in, and that will change. Markets tend to, frustrate the most before they make a move. So you got to just stay in focus and stay disciplined, like as usual. Okay. All right, everybody. I'm going to get out of here. Have a great weekend. Happy Mother's Day, everybody out there. Hope you guys have an enjoyable weekend with your mom So I'm going to announce a class. Again, if you want newsletter, put some comments on below. Looks like we're going to get through the session today. So again, if you want to contact me support at transparenttrading-solutions.com. If not, I'll see you next Tuesday. Have a great weekend, everybody. Again, happy Mother's Day, and we'll talk then. Okay, take care, everybody.